Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Albemarle Corp, ticker symbol ALB. Currently the stock is down 29.01% in the past year, the market cap is $9.55 billion, and the annual dividend yield is 1.99%. Analysts generally rate this a hold. Some analysts rate it a buy. Most of them are rating it a hold currently. The analyst price targets range from anywhere between $73 to $225, with an average analyst price target of $104.64. I'm going to be honest, guys. I thought that this was going to be just a very easy company to kind of value and give my opinion on, because most of these types of companies that are getting raw materials are very boring, very mature, and just very predictable. But this stock has negative free cash flow and increasing revenue that's pretty consistently increasing. Some years it's pretty sporadic, but overall an average revenue growth 35.75% over the last 5 years. And I think that this stock's very difficult to value because you basically have to be looking at the demand for electric vehicles. You have to be counting on that number to increase. And I think that an easier play to make money would actually be betting on natural gas companies and valuing those individually. The demand for energy is just going to increase pretty significantly and consistently over time. And I think that you can see that in a lot of the pipeline infrastructure companies, and as well as just like ExxonMobil, a lot of the big producers of, the actual oil. Lithium, on the other hand, you're essentially counting on electric vehicle sales to increase, and me personally, I just don't see it. And I think that it's very difficult to try and predict the price of a commodity like lithium. I think you'd be a lot better off on a very safe bet on something that's going to have increased demand either way, even if prices fluctuate down or up on a given quarter. I thought that this company would have very positive, consistent cash flows, and I was completely wrong. From my judgment, they've been doing a lot of from my research, they've been doing a lot of different CapEx and things like that to try to increase their free cash flow over time and just generate more growth. And for me personally, this seems like way too risky of a bet. I don't really want to be involved in this company after doing some analysis on it, and I think that we should probably segue into the DCF model valuation so I can show you exactly why and my breakdown, because this was supposed to be an easy company to understand, and in my opinion it is very difficult to try to actually put a value on it, and you have to essentially be a macroeconomics wizard or know everything about the lithium industry to really get a reliable growth rate and those types of things for this company. Here I have my weighted average cost of capital of 7.37%. They're 72.53% equity rated and 27.47% debt weighted. You can see that the cost of equity here is 8.338%, and the cost of debt after tax that I calculated was 4.807%, bringing us a weighted average cost of capital of 7.37%. This is a very optimistic sort of modeling, and I'll tell you guys why. Because I base this off of the one positive free cash flow that they had in 2022, just to kind of humor myself and see if the cash flows were positive. This is kind of what you could expect. I don't think that that's very fair. I think that we should actually model it off of the average free cash flow here. This paints a very different picture. You can see here that the stock is valued at negative $111.37. I think that it's probably very close to its fair value. I think there's still probably some downside to the stock, unfortunately. And I think that you'd actually probably be better buying the LIT ETF that has a lot of different lithium companies, because from what I can tell from this stock is going to take a while before the free cash flow actually becomes positive. Overall, I think that the lithium industry is not going to be a winner when it comes to just natural materials and things like that, just because I don't think that the demand expected for electric vehicles is really going to hit where a lot of these optimists think that it's going to hit. I think that the stock needs time before it can make the free cash flow positive, and that's not a good position to be in as an investor. When you see stocks that have negative free cash flows, you want them to be called something like Amazon or even Palantir, I think, because you have so much more growth. And this is supposed to be a very boring, slow company. And it seems like they're really expanding at a very high rate. While that is good for growth, they're doing something that's so basic that this should be very easy to model. And it's very frustrating to be in this position where the cash flows are negative pretty significantly, and it's very sporadic, and I just do not like that in a company. I want the cash flows to be very consistently raising, or if they are negative, I want it to be involved in something cutting edge that has very high margin. This is not that type of company. I do not think you should necessarily sell out of it. I think it's close to its fair value, probably, but I think that you're going to get disappointing returns when you compare it to something like a Waste Management, something like an Energy Transfer, an Enbridge, Wallbridge, Kinder Morgan, ExxonMobil, a lot of these actual traditional energy stocks, even AT&T, I think you're going to get a more consistent return with a more reliable dividend. And I think that this stock is probably overhyped and trading at a premium still or very near its fair value. I don't think you're getting a special deal at this price just because EV is so hyped up because of Elon Musk and because of just this electric vehicle fad. I don't think it's going to be a permanent thing. I don't think that we've built up, I think it could be a permanent thing in the future. I want to say that, but I don't think we've built up the infrastructure yet to actually maintain real electric vehicles on the grid. And I think that this is going to be a massive detriment to this company. That's the video. I think that this stock is one of the most frustrating ones that I've actually had to value in a long time. I think that it's very inconsistent. I think that lithium is going to be inferior in the future for demand compared to petroleum. And that's kind of my review. I could be completely wrong. Let me know in the comments section down below. I'm very interested to hear what you guys think, but I would not touch this stock with a 10-foot pole. Thank you. Bye.